Hey guys, welcome back to the channel McNallie Money, home of all things stock, investment, and personal finance related. Now for today's video, we've got a really special one for you. We're going to be joined by Daniel Roberts, who's the co-founder and co-CEO of IREN Energy Limited. We've put together a list of questions between myself, Anthony Power, and Sebastian to ask Daniel, now that the company's hit 7 exahash per second, they've broken into the AI space, and we're seeing a major rally in the price of Bitcoin. We've got a lot to go through, but before we get into that, please take a second, hit the like button, you guys. It's a big help to myself and the channel. If you're not already subscribed, McNallie Money, feel free to join. And let me know in the comment section below if you're currently holding shares of IREN, what your thoughts are on the Bitcoin space overall, and on today's discussion. Now with that being said, let's get into today's video. Okay guys, so that's right. Today's video, we've got Daniel Roberts, back by popular demand, the co-founder and co-CEO of IREN Energy, trades under the ticker IREN on the NASDAQ. Super exciting time for Bitcoin and obviously the Bitcoin miners. So Dan, thanks so much for being with us here today and looking forward to the discussion.
Pleasure. Glad to be here, Bryce.
Hey, so as I mentioned in the intro, the questions came from myself, Anthony Power, and Sebastian, so we've got a real mixed bag here. But before we get into that, for people who maybe missed our prior coverage, can you give us just a quick high-level summary on IREN and your current sites and operations?
Absolutely. So IREN was founded by myself and my brother, Will, about 5 years ago. We've got 4 sites at the moment that we've publicly announced that are operational. 3 in British Columbia, Canada, using hydro and 100% renewable energy up there. And then an additional 4th site in Texas, up in the Panhandle region, again, 100% renewable. There's currently 20 megawatts operating there, but we already have power secured for 600.
Amazing. Yeah, I know we just announced some big exahash capacity improvements. We're going to get into that in right a second here. Now, first off, we're seeing a lot of excitement in the Bitcoin community. Obviously, the price of Bitcoin is on an absolute tear over the last week here in anticipation of that big spot ETF approval, among other things. Can you tell us what really differentiates IREN from some of the other miners in this space?
Oh, look, yeah, as we know, there's probably 15, 20 other miners. Everyone's got different strategies. Our strategy has been really to leverage our infrastructure and institutional capital backgrounds. So we build data centers. We don't use sea cans and shipping containers, old abandoned warehouses. We don't go behind the meter and borrow transformers and sublet things. We just don't create attack vectors. We own and operate everything. We develop sites ourselves. So we identify the land, we put in the grid connection requests, we build out the substation, the transformer, we build, own and operate our own proprietary data centers, we own the chips, we mine them ourselves, we've got proprietary algorithms that trade the energy markets. So really it's been about controlling our own destiny. As we know, Bitcoin and Bitcoin mining is a really interesting space where the returns can be quite asymmetric in terms of the upside and the downside. So for us, our mentality is infrastructure, credit backgrounds, and having a lot of personal wealth in the business has all been about protecting the downside and getting as much upside exposure as we can for us and our shareholders.
Now, speaking of upside, that's a perfect segue. So we've seen the miners really act as almost a call option on Bitcoin over the last 6-12 months. They seem to move kind of exponentially in relation to the underlying asset, which is obviously Bitcoin. Now, that being said, some of the miners are up 200, 300, 400% this year, whereas IREN is up, I think, 150, 200% range. So it is lagging a little bit in terms of share price. Why do you feel that is, Dan? And do you feel we're going to continue to see that kind of exponential growth as Bitcoin continues to appreciate?
Yeah, look, our focus is on the fundamentals of the business, first and foremost, generating earnings, building quality infrastructure, building for the long term. We don't view this as a short-term play where we're buying miners and just jamming them in any PowerPoint that we can. We're building multi-decade infrastructure and data center facilities, and our focus is really on that. But absolutely, we're aware of where the market sits. We're doing a lot of work with analysts, investors. We recently did a site visit for analysts out to our Childress site. So stay tuned for more detail on how that went. I think in terms of valuation, it's worth noting we IPO'd at the absolute peak of the last cycle. I think Bitcoin was $65,000 November 2021. We had JP Morgan, Citi, Canaccord, the first IPO and the only so far bulge bracket led IPO. 90% of the IPO book was institutional money. So, we raised good money. We're off to a good start. And then as we know, the market in many respects dropped off, the macro, Bitcoin, etc. And it's only now that we've started recovering. So I think there's been constructive turnover in the stock, people selling out, people accumulating, rebuilding the register. And I think now going into the next cycle, it feels like we've got good awareness in the investor market. And I would expect us to participate alongside other miners in any upswing in the Bitcoin price from here.
Gotcha. It's a good answer, and this is one that I personally hold. I've been adding to my position. You guys are continually ranked among the top 3 in terms of efficiency, which we're going to talk about. So it's interesting to get your perspective there, and honestly, a few more weeks like this, and we might be back at 65,000, so who knows. But speaking of growth, I know you guys just announced your big increase of capacity up to 7 exahash. You bought some new S21 units. How does that really impact the company? How are you guys feeling about that? And then as a secondary question, I know you mentioned 9.4 exahash as kind of the next milestone, and then 30 exahash as kind of the horizon goal. When can we expect to see some of those numbers coming out?
Yeah, and look, 30 exahash is essentially all the power and land that we have today. So that's assuming no more growth, no more sites, etc. So that's simply just building and expanding our existing Childress site. So we'll do that as swiftly as makes sense. We don't believe it's healthy to put a target on it, particularly in the short term, and then dilute shareholders indiscriminately to achieve what's essentially an arbitrary target. We'll only raise capital and deploy that as we deem it accretive for shareholders. So that might take some time, but with Bitcoin running, you can fully expect that we're already working out how we accelerate different timetables, construction, procurement, etc. So I would continue to expect our construction and speed of expansion to be correlated with the market, i.e. as the market improves, we will go harder and faster. If the market goes soft, then equally we will manage risk as we always have done as a business and not overextend the business and our shareholder base. So that's kind of where we sit in terms of the broader expansion. The 7 exahash is the hardware we bought, 5.6 is operating, 1.4 due to be delivered early in the new year. The 9.4 total, and there's a few numbers in there and I apologize, but the 9.4 is what we've publicly said we will be building out in terms of data center capacity by early next year.
Okay, makes sense. So early next year. And then one of Sebastian's questions was, obviously you guys purchased some of the brand new rigs, the S21s, very efficient, getting ready for the halving event. Based on your last answer, it sounds like you're going to continue to purchase, or are you going to pause now that we're seeing some action in the Bitcoin market and the price of some of these rigs is going up?
Again, it's all about optionality, as I referenced earlier. We try and create as many call options as we can in this business, and having some latent, vacant data center capacity early next year is giving us extraordinary optionality. It's giving us optionality to negotiate with prospective AI and HPC customers at scale, both for use of cloud facilities where we own the GPU. And as you know, Bryce, we've recently acquired $10 million of the latest NVIDIA GPUs. It gives us flexibility to discuss large-scale co-location deals with customers who buy their own GPUs and need a home for them. It gives us flexibility to be opportunistic with the hardware pricing and opportunities to procure hardware in the market, as we've seen, procuring S21s for $14 a terahash. I think it's reflective of us capitalizing on that. And then finally, maybe we even look at Bitcoin mining hosting. If the economics are super compelling, it's capital light, it's a way for us to scale quickly without losing too much upside, then we'll look at everything, right, and try and make the best decision for our shareholders that we can.
I love it. I love it. And I want to talk about some of the new verticals, specifically AI, in a second here. But a follow-up question to that. A lot of the miners are obviously selling their monthly production to cover OPEX costs. As the price of Bitcoin goes up, fewer and fewer Bitcoin need to be sold. So what's the plan to fund this expansion? Is it just sell what you mine and dilute, or are you going to avoid dilution to remain debt-free, or what's kind of the mix there?
Yeah, look, again, we'll stay flexible. What we are highly unlikely to do is keep Bitcoin on our balance sheet. We don't think that that's generating value for shareholders. We think if shareholders want Bitcoin, they should go and buy it themselves rather than pay us to do it. They're shortly going to have an ETF if they're not happy with custody arrangements in terms of self-custody. But we don't think we add value. And in fact, we think we're destroying value, because when we can reinvest our earnings in a compounding nature linked to the price of Bitcoin, why would we hold a static asset on our balance sheet? Historically, these mining machines trade on 100 to 125% cash yields at the time of purchase. So if I hold a Bitcoin on balance sheet, that's a Bitcoin or cash that I can't reinvest to compound a Bitcoin linked return for shareholders. And then finally, if we do hold it, well, where would we hold it? Do we trust one of these centralized exchanges, custody, etc.? It just feels wrought with challenges and difficulties. So we struggle to see it makes sense. We think the sector is moving on as it institutionalizes. We think that this HODL narrative is probably likely to disappear over time, particularly as you see the introduction of more pure securities and products in the market, which allow people to get that raw exposure to Bitcoin as a commodity, as distinct from Bitcoin mining as an operational and infrastructure business. In terms of funding of growth, we'll continue to, clearly we've got operational cash flow. Clearly we would like to look at distributions at some point and returning capital and cash to shareholders. We'll look at equity, we'll look at debt, we'll look at everything in between. And again, it's done through that lens of what's going to generate value for shareholders and what's going to create as much asymmetric risk return profiles for shareholders in terms of making sure that we're protected against the downside, but equally maximizing the upside exposure to the asset class.
That's really interesting, actually. I didn't know that. So the goal with you guys is not to hodl, almost treat it more as like an oil company or something where you produce it, you sell it, and then you throw off a dividend. Is that what I'm hearing?
What other sector in the world hodls a raw commodity?
Yeah.
You don't see gold miners, you don't see copper miners. Like I understand where we've come from as an industry. Started off with hobbyists and enthusiasts on their mums and dads' computers in the basement, and then we had the shipping containers, sea cans. This mentality of mine every Bitcoin you can at the expense of tomorrow, reinvestment of earnings on a tightly held private business. But I really do think the HODL narrative is unlikely to persist long term.
Okay, yeah, it's quite a contrast from some of your peers, and it is interesting now to see as the industry evolves, people are really taking their businesses different directions. So that was news to me. I do agree with you, though. It does seem to make sense, and you don't see a lot of other companies that have a big reserve of a core commodity like that. So thanks for sharing that, Dan. And now shifting gears a little bit, you guys announced some big AI news just recently here. We're actually starting to see a lot of the miners get into the AI space, a lot of synergies with the business and the data centers and such. So can you speak to us a little bit about what that represents? Are you looking at this as kind of a future growth opportunity or a hedge against potential bear markets in the future? How should we think about this?
Yeah, look, it's more the former, growth opportunity. We're not overly concerned about Bitcoin bear markets. It's clearly not our preference, but we've got $64 million in the bank. We're generating substantial monthly operating cash flow. We've got a significant power cost competitive advantage at our Childress site, given that a couple of cents per kilowatt hour and potentially a path to lower. So our position in the cost curve is secure. We're feeling really good about the Bitcoin business. I think for AI and HPC, like, this is not new. Interestingly, we're moving house at the moment, and I found a copy of one of our seed decks from 4 or 5 years ago. And we had all these slides on the digitization, the exponential growth in data center capacity, the need for renewable energy powered computer capacity. And that was the thematic that we built these data centers on. And again, we are doing proper data centers, not CCANs, warehouses, trial and immersion cooling that struggles in the heat. We're doing things properly. And I think that's setting up really well to now go back into AI and HPC after we signed an MOU with Dell 3.5 years ago. So we've bought $10 million of the latest NVIDIA chips. We're in multiple customer discussions around use of that, as well as a BYO GPU model where it's essentially co-location. People bring their own GPUs and we manage it for them. It looks really interesting. It will take time, but our data centers are well set up. Maybe there's some additional redundancy we need to overlay, maybe not. The whole market is working out where they need to go with this, and we'll continue to work with it. So we're excited. One of the analogies I'll use, Bryce, actually, is almost modern day farming. So if you look at agriculture, it's really simple in the sense of the business model. Your raw inputs and your asset base are good land, and then hydrology, the water. Now, what crop you choose to plant is a function of the market and demand and supply, and you can rotate crops over time. The analogy then transfers to our business, where we view low-cost renewable energy as that fuel for the future, the equivalent of the water for agriculture. We then build the facilities, the land, the data centers. How we choose to monetize that raw input of renewable energy into this digital age is something that we'll retain flexibility on going forward.
Love the analogy. Very interesting analogy. And I'm impressed. You're running one of the best Bitcoin mining companies in the world. You got 5 kids and you're moving your own house, Dan. It's impressive stuff you're doing there. Now, keeping on the AI trend, we've seen a bunch of the other miners talk about AI. Bit Digital just announced multi-million-dollar investment and some secured contracts. So with Iris, do you guys have any secured customers or contracts on the books? Is there anything kind of preemptive there, or when could we expect revenue from that business unit?
Yeah, look, we've said that the NVIDIA GPUs will arrive in the coming months, so I'd expect them to arrive in that time frame, and then an expectation that we'll sell cloud capacity linked to that. We haven't announced any specifics around customer contracts for that capacity, nor have we announced any specific customer contracts around a potential co-location model, but we're working through it. I think the key opportunity for us is we've essentially got the data centers ready to go. We don't need to change much, is our impression, to actually service these customers. And I think that might be a clear difference when it comes to most other miners announcing entry into this space. They don't have the data centers, they don't have the track record in operating power dense compute on a reliable scale, and I think that will bode well for us. But like everything, we don't rush into stuff. We do it properly. We do it once. We don't like suboptimal contracting arrangements and looking over our shoulder, putting out spot fires. So we'll do things properly, and stay tuned.
Okay, great. Now, kind of extending on that farming analogy, which I really like, and talking about some of these new revenue opportunities, I realize next year's halving in April 2024 is about 180 days away. The next one from there would be approximately 4 years out. In your opinion, how many more of these halving events can the industry withhold before it's just not profitable or scalable to mine Bitcoin at a major level like that?
How many more halving events are there?
Quite a few, I think. Out till 2140, I think, or something.
What's that, 29? So I think the industry will survive another 29 halving events.
Yeah, and price will just keep appreciating?
Well, I think that's the case. Like, I think most people these days appreciate that Bitcoin is a 1 and 0 technology. And I think a lot of people are now starting to realize that it's very difficult to see how it becomes a 0. In which case the logic sort of points to it continuing to accrue value. And, when you look at every other industry, it's being digitized, it's going online, it's being disrupted by these digital social networks, whether it's Netflix and Blockbuster, it's Facebook, it's Amazon. Like, these businesses are all going online. It's kind of the death of the physical and the transition to the digital. So if you look at gold as an analog, right, and we know Bitcoin is more than gold, but let's keep it simple. Gold is worth the equivalent of $600,000 a Bitcoin. But gold was no good. Gold failed as money. It failed as a store of value. It was too heavy, too hard to transfer, too hard to divide. So we couldn't hold it as a store of value. We gave it to governments, banks, churches. Historically, they issued pieces of paper. We could redeem them at any point in time. And then generational memory loss, all of a sudden there's more pieces of paper than there are gold. So without going through the history of money, there's far better qualified people to talk through that. I think even if you just look purely at gold and look at Bitcoin as gold 2.0, it's scarcer, easy to transfer, easier to divide, it's more durable, and gold 2.0, gold parity would be $600,000 a coin, and then we're getting started.
And you're talking if market cap was the same for Bitcoin versus gold, correct?
Yes, that's worth clarifying. So if you said the gold market cap was $12 trillion, and I think the numbers speculated are a bit higher, but simply just do $12 trillion divided by 21 million Bitcoin, and that's how you get your $600,000 a coin. And I think that's worth commenting on as well. Like, gold has been the scarcest asset, but gold isn't scarce over the long term. The compounding nature of 1.82% year on year, over 35 years, you've halved your share of the gold supply. Over 100 years, it's been divided by 7 times. You've now got 14% of the value that you once had. So I think through that lens, and knowing that if you buy one Bitcoin and you will always have 1 divided by 21 million, that is extraordinarily powerful. And if we want to use another analog, being fiat currency, the US dollar since 1971. Do you know how many more US dollars have been printed over the last 50 years once we went off the gold standard?
Is it 77?
66 times.
Oh, okay.
There are 66 times more US dollars in circulation today than there was 50 years ago. Do you know how many more Bitcoin that will be printed in the next 50 years? 0. There will only be over 21 million. Like, I think this is a pretty profound development, and I think we've passed that inflection point where the questions around Bitcoin survival are now being heavily mitigated and dismissed. And if it survives, then I think we know where it goes.
I definitely agree. And the Bitcoin Standard, the book, does a great job of kind of comparing and contrasting hard money and fiat currency and the gold standard. And it makes a great point that Bitcoin truly is the only finite thing in the universe that we're aware of at this point, right? So they can obviously continue to mine gold, but like you say, there's only 21 million Bitcoin. And on top of that, a lot of those are locked up or lost or missing or whatever the case is as well. So I would argue there's probably fewer that are actually going to be available. But great points there, Dan. Now, the next kind of question for you, I was going to ask about your HODL strategy, but you've made it pretty clear what your thoughts are there. Anthony Power does a really good job of putting out comparison tables of the different miners and ranking. You guys have continually been in the top 3. Some of the stats I have here: first place in terms of revenue per petahash per second, and third place overall for Bitcoin mined per exahash year to date. So obviously the rigs themselves are a big component of this, but what do you attribute really that success to? How have you guys managed to be so efficient month after month after month when each one of these miners is trying to get that top spot?
Yeah, look, I think it's going back to the roots and first principles and saying, how do you build multi-decade data center facilities? And if you're not doing that and you're using confusing terms, if you're using C-cans, shipping containers, immersion technology, it's extraordinarily difficult to manage heat. You know, in these C-cans, every time the ambient temperature goes above, 22, 23 degrees Celsius ambient temperature, a lot of the computers choke on themselves from the heat and shut down. The same with immersion. It's very difficult to manage hot temperatures. It becomes exponential. Even if you ignore all the moving parts around pumps and pipes, a lot of the immersion cooling actually used air cooling. all they do is sweep the hot fluid outside, blow hot air on it, and then take the fluid back, and the same fluid back into the chips. Like, how is that ever going to be more efficient at evacuating heat compared to just using large-scale exhaust fans to blow the hot air off the chip surface and evacuate that heat into the atmosphere, never to be seen again? So I think the market's starting to realise this. I think they are seeing the data where a lot of these other miners are only getting 70 to 80% equivalent uptime, and it's just because some different facilities they just don't work. The market's moving on.
Gotcha. Okay, so wrapping things up here, Dan, this has been an awesome discussion. So we've covered a lot of ground, obviously the halving event, getting into the AI vertical, some of the expansion opportunities. What would you say is the company's #1 focus right now, in your opinion?
Just keep doing more of the same. Look, I think we're in a really good cadence on the Bitcoin mining side. We've got 100 people globally. We've got established construction processes, teams. We will continue to build out our proprietary data center design, and we will continue to grow in parallel, pursuing AI, HPC, other growth opportunities in parallel. Makes sense because we've got the time to do that. We've got the capability, we've got the team. And then finally continuing to educate the investor market, the analysts, the institutions, and educate them on the nuts and bolts of our business, how we're able to perform at such high efficiency, the optionality in the platform, and our approach generally to business.
Gotcha. And speaking of keeping the analysts and investors updated, I know it's pretty common now for monthly updates. Anthony asked specifically, will Iris be pushing forward with quarterly updates similar to some of the peers, or sticking to monthly now?
Well, monthly is more frequently than quarterly, and I think universal feedback from, or near universal feedback, I don't want to use absolutes, from analysts and investors, is that our reporting is the most detailed in the industry. So I don't think we can get more frequent than monthly.
Great. That works for me. I prefer the monthly myself, but I told Anthony I'd get that one in there. Now to close things out, it's prediction time, so I'm curious to hear your thoughts. The spot Bitcoin ETF in the US, it's all the headline right now. Do you think we're going to see that trading before Christmas, Q1 of next year? And what's kind of your price target or price prediction for Bitcoin to close out the calendar year here?
Oh, look, we're all making it up, aren't we? Particularly in the short term, and Bitcoin will do Bitcoin things as it has done for the last 10 years we've been involved in it. So whatever, all predictions will be wrong. Look, I like gold parity. I think $600,000 a coin. That narrative is an easy one. I think it's something that will occupy mind share over the next few years. Maybe it takes another cycle or two to touch up against it, but I would have thought 6 figures in the next cycle would be achievable, particularly when you look at the evidence that the last cycle was chopped off in terms of the peak because you had these exchanges selling people's Bitcoin and not buying them the Bitcoin that they put the order in for. So look, I think it's a really interesting time at $30,000 a coin. It does seem an asymmetric setup.
Yeah, it's an exciting time to be a part of. And the ETF, do you think that's going to be in year here or early next year?
Feels like it could be this year. Wow. I mean, we know from our experience dealing with the SEC and the detailed commentary around registration statements, the way that all of these issuers seem to be engaged in that granular level of detail around the specific language around their registration statements implies that they would seem to be getting quite close.
Yeah, I would tend to agree, and what a great Christmas gift it would be to all of us. Now, thanks so much for your time here. I'll kick it back to you if you have any closing thoughts. I'll leave a link to the company website and all your social media handles as well, but I really appreciate the discussion today, Dan.
No, likewise, Bryce. Always a pleasure to come on. Appreciate everyone's support. We're active on Twitter, LinkedIn, I should say x.com these days. My personal handle at danroberts0101. Feel free to ask questions and shout out. I try to respond as much as I can.
Right on. And same thing here, you guys, drop them in the comment below. We'll get Dan back on in a month or two and go through some questions. If you're still watching the video at this point, hopefully you found some value, so make sure you hit the like button. If you're not following the channel, McNallie Money, we'd love to have you. Dan, thanks for your time today. We'll see you soon, buddy.
Look forward to it. Thanks, Bryce.
Cheers.